Hello, everyone, and welcome to our Trends in ESG Ownership study presentation focusing on passive ESG ownership today. I'm joined today by my colleagues George Bennett. He's an ESG consultant focusing on ESG ratings. Welcome, George.
Hello.
And by my colleague Keelan Watson. He is an ESG analyst. He specializes on ESG invest integration processes, supporting our clients' ESG roadshows and ESG ownership studies. Thanks for being with us, Keelan.
Hi there.
Right, so today we wanted to take the opportunity to share with you some of our research based on the data that we have come across since 2016, working with various clients and noticing that in most cases, that aspect of ESG passive ownership was growing at a rapid pace. And that intertwines with the work that we do with these companies, supporting them on the ESG ratings, responses and data verification. Yeah, we'd love to take the opportunity to show you this trend across a wider sample of companies. Moving on, just to set the scene, we wanted to start by analyzing the context to the ESG passive ownership data set that we'll be discussing later on. So at a high level, we start considering the equity assets managed by institutional investors that we can quantify at around $60 trillion. So this is sort of the entirety of the market for the purposes of this research and study. Then within these 60 trillions, we find that roughly $1 in $5, or 20.9% of these equity assets integrate ESG considerations in portfolio asset management decisions. This is based on our own research. We analyze each of these institutional investors in detail to basically quantify this ESG market. Now, going a little bit deeper within this segment of ESG equity assets under management, we consider a small subsegment of ESG equity assets managed by active ESG thematic funds. This would be funds that already in their name self-identify as ESG because of their themes being, for instance, climate funds, ethical funds, stewardship funds, etc., etc., etc. There is a smaller group of funds that are passive in nature because they track ESG indices that, although still small proportionally or compared to the rest of the equity market, we see as growing so rapidly that, in our opinion, is worth considering this subsegment, and also because it's very closely interrelated to the work that most companies do already in terms of improving communication with ESG rating agencies and all the work that they do in data verification and so on. So this is why we're going to spend a little bit of time now looking at the ESG ratings scene, and also to help us complete this picture. So over to you, George. Thank you.
Thank you. So as alluded to Miguel, ESG ratings and their underlying data play an essential role in the composition and management of ESG passive funds. They're often used as a way to exclude companies that don't hit a certain benchmark, and also to reward companies that do hit a certain level of ESG performance. Since they play such a pivotal role in the eligibility of these funds, improving ESG ratings is critical to attracting ESG capital in the long term. Our research shows that the rating with that is most commonly tracked by these ESG passive funds is that of MSCI, with 51% of ESG passive funds analyzed in the company sample tracking ESG indices using MSCI ratings. Other notable ESG index providers include FTSE, known for its FTSE for Good index, the DJSI, or otherwise known as the Dow Jones Sustainability Index, which leverages the ESG ratings from the S&P Corporate Sustainability Assessment, or CSA, and Stocks, which uses the data and ratings from both ISS ESG and also Sustainalytics. Outside of the passive ESG fund market, there's also ESG thematic funds. And although these don't necessarily track an ESG index, they're often influenced by ratings and underlying data from these agencies, just ever more emphasizing the importance of staying on top of your ESG ratings.
So thanks, George. Just a brief introduction to the methodology of the study. So the geographies we focused on were Europe, the United Kingdom, as well as the United States and Canada. So after conducting our initial screening, we were left with a target list of roughly about 1,000 companies. So the next step involved trying to find a balance between the number of companies who entered in our sample, as well as a split between industries. So with this in mind, and prior to selecting our sample companies, we determined that we wanted our sample to consist of firstly 360 companies, and secondly weighted by industry according to the S&P 500 index. So having defined the number of companies we would have in our sample and the split by industry, we then randomly selected our sample of 360 companies. So we can see the split by industry at the bottom of the page. So with technology, they contributed the most companies with 70. And then on the other extreme, we have telecom and business services contributing 8 companies respectively. Thank you.
Thank you, Keelan. In this slide, we wanted to take a look at the growth aspect of the ESG passive fund ownership. And just looking directly into the slide, we clearly noticing the rapid growth expressed in terms of compound annual growth rate being 22% for this small segment of the market. This clearly outpaces the rest of the markets, even when looking at active ESG ownership. It is this growth is much higher than what we've seen in any other market segment. And so thinking on why is this and what are the key drivers for this growth, we immediately sort of looking at 3 different elements, 3 main factors. One clearly is the availability of ESG data and indices that investors can rely on. This has been made increasingly available to the marketplace. The second aspect is the fact that retail investors have continued to align the sustainability values with where they place the money, the investments, sort of directing more and more of the savings into sustainable funds. And thirdly, is clearly the growing popularity of passive investing. It clearly offers a low-cost investment solution to many retail investors out there. So these 3 factors have underpinned the strength of this growth. Over to you, Keelan.
Great. Thanks, Miguel, for summarizing the overall ESG passive fund trend for the sample companies. We'll now take a deep dive into the industry analysis of our sample companies. So of the 360 companies that we looked at, they were divided into 12 industries, which you can see in the chart. So just a reminder that the number of companies per industry was based on the S&P 500 industry weightings. So this chart illustrates the total ESG passive fund ownership versus the total equity ownership per industry. So the green arrow, which you can see more or less in the middle of the chart, this shows the trend of the overall sample, which Miguel showed on the previous slide. So in 2019, this was 0.7%, and in 2023, it was 1.6%. So if we focus in on some of the industries, we can see the general trend is upward, with only 5 of the analyzed industries, including business services, consumer services, telecommunications, consumer cyclicals, and industrials, experiencing one period of decreasing ESG passive fund ownership during the 5-year period. As we can see, the utilities industry is the most represented stock in ESG passive fund ownership, likely as a result of these companies playing an important role in the energy transition. However, on the contrary, several factors, including sector-specific challenges and their perceived sustainability impact, could explain why industries such as consumer services and consumer cyclicals have a lower allocation of ESG passive fund ownership, so 0.98% and 1.2% respectively. Thank you, Mikael. So as we saw in the previous slide, we got a glimpse into each of the industries' growth over the 5-year period. However, in this chart, we seek to understand which of these industries has the fastest and slowest compound annual growth over the 5-year period. So we can quite clearly see that the technology industry has the highest compound annual growth rate since 2019, sitting at about 31.5%. And this could be as a result of ESG indices allocating a higher weighting to companies within the industry, given its importance in driving sustainability efficiencies. However, clearly there are strong reasons why ESG funds would have increased their exposure to the technology industry outside of these ESG factors. For example, looking at expected market growth of these companies. So we also think it is important to understand that each industry has its own unique ESG challenges. For example, business services and consumer services, which you also highlighted on the previous page. They have a lower overall compound annual growth, which is likely, as we said before, as a result of the lower perceived sustainability impact compared to an industry like technology or utilities. Thank you, Mikael. So taking a step away from sort of the industry analysis and taking it, a different direction and identifying the ESG passive fund ownership trends and differences between Europe and UK versus North America, sort of the sample companies, we draw 2 really important conclusions. And the first one is that ESG passive funds have a larger share of total equity ownership in Europe and UK companies compared to North American companies over the 5-year period. So in Europe and UK, we see the ESG passive fund ownership representing 2.26% in 2023 versus 0.87% in North American companies. And the second important conclusion is that the compound annual growth rate of North American sample companies is higher at 32.8% compared to European companies at 20.6%. And one likely reason for this is the lower starting point for North American companies in 2019 at 0.28% versus European companies which had an ESG ownership of 1.0% in 2019. So while these markets have seen steady growth in their ESG passive fund ownership since 2019, there are current and impending ESG challenges and opportunities. So in Europe, the European Securities and Market Authority, also known as ESMA. They have finalized guidelines for sustainable funds, which is aimed at limiting greenwashing. Similarly, in the UK, the Financial Conduct Authority, or the FCA, they have also finalized rules in 2023 with the same aim. Meanwhile, in the US, there is a persistent political backlash on ESG, which has created an environment of caution among both investors and companies. So the sort of key takeaway from the slide is that there is a general upward trend in ESG passive fund ownership in the sampled geographies. However, given the various risks and opportunities expected to play out in these markets over the coming years, we can expect ESG passive fund ownership to grow at different rates within each of the geographies. Thank you, Miguel.
Thank you, Keelan.
Over to you, George.
Thank you. So to summarize then, overall, our research suggests that the ESG passive fund market has been growing rapidly over the last few years. And we see this likely to continue in the future, especially given the benefits to these passive ESG funds being often a cheaper option for those looking to make ESG investments. However, this won't be without its challenges. So we see that there will be some challenges and opportunities both in Europe, the UK and US with emerging regulations and ESG backlash, which could result in varying growth rates in each of these markets. For many years, Leaders Arena has supported sustainability and IR teams involved in ESG ratings, helping them to monitor the market, identify the most impactful ratings for their shareholder base, and also for helping them to perform an effective data verification, which sees them improve their ratings over time. This invaluable support is crucial for helping them stay on top of their ratings and ensuring the best chances of eligibility for coveted ESG rating indices, such as the Dow Jones Sustainability Index by S&P, or also the MSCI ESG Leaders Index. Related to this, Miguel, we also support companies with investor communications, targeting, and ownership.
Thank you, George. Yes, precisely the work you've just explained, all that we do to support our clients in terms of verifying the ESG data, the data is collected by ESG rating agencies, already sets a very, very strong foundation for these companies to be able to attract ESG-oriented capital. But we do clearly additional work to make sure that companies make the most of this opportunity. Starting with making sure that your ESG communication targets the most suitable investors. Companies have their own sustainability story. Investors have their own priority areas within ESG. And throughout our detailed research, we have developed our what we call the ESG investor scorecard database. We analyze in a lot of detail how each of these investors integrate ESG. So with that, we try to create a perfect or as good as possible match between your company story and the expectations from these investors. So that is one aspect that we do take care of. And the other one that is also just as important is making sure that we capture the most material and relevant aspects of your sustainability story, and that content is made available in the easiest possible way to both investors and analysts. So we look at creating or improving your ESG presentation, investor presentation, also creating or improving the content that is ESG related available on your website. And finally, we always encourage our clients to monitor progress. We want to make sure that your team and your stakeholders are fully aware of the return, the results of the team and and your colleagues the time invested in improving ESG communication. And how do we measure that? Well, we look at various aspects of your ESG ownership to track how these hopefully grows over time. And we divide this in different categories, being passive, being active, by geographies, to give you the full picture, and also comparing that with your peers to establish very clear KPIs. With that in mind, we'll bring this presentation to an end. Thanking you for your time and your availability to listen to our presentation today. Also, thank you to my colleagues, George and Keelan, for being with us today. We look forward to your emails. If you have any questions, please send those to us. If you want a copy of these slides, we could definitely send them to you, and also a complimentary copy of our study. So thank you so much, and we look forward to being in touch. All the best. Bye.